Good afternoon. It is January 3rd, 2017. How is that even possible? This is Susan Habel with RVA Fractional Accounting, and it's Tuesday, so it's Tax Tip Tuesday again. Today I want to talk about getting ready for tax season and tax preparation. This is a great time of year to start going through your records from 2016 and getting ready to get your taxes prepared, whether you do them yourself or whether you have someone else prepare them for you. It's a great time to start going through your prior year's return and see what documents did you need last year. Did you need, you have a mortgage statement, W-2s, were there particular things that you might be hard to remember? How many banks did you have interest income from? Things of that nature. So go ahead and make a list of what you got last year, so as they come in the mail or they get emailed to you, you can mark them off and you know you have what you need. Because the worst thing is, well, not the worst thing, but not a great thing is to file your taxes and then you find out when another form comes in and you have to file an amended return. Nobody wants to do that if you don't have to do it. So I would take the time now and go through what you've already got and figure out what you need that will be coming in, so you can get in touch with your bank or your mortgage company or whoever if you don't get something that you need by the end of January or into the beginning of February, because most things should be mailed to you by the end of January. So if you don't have items by the middle of February, I would ask, where is this, so you don't sit and wait. This is a great time to start getting your documents together. If you've done a lot of charitable contributions, it's a good time of year to go ahead and start getting them valued, so that information is ready to put on your tax return when you get it. There's a software product called It's Deductible that's great at giving you 3 levels of categories. I think it's fair, good, and best, or something like that. So if you have something that's practically brand new, you want to take the top deduction. If it's something that's fairly used, you're going to take a lower deduction. But it's a great tool to go ahead and get your items valued. And I believe that our Goodwill and Salvation Army also have some information. It's not as detailed, but also can give you ranges of, a dress is worth between A and B, depending on the quality and many factors about it. But I would go ahead and get that together. You want to take what is suggested as reasonable values, because if the IRS audits you, which I hope that never happens to any of you, but if the IRS audits you, you need to be able to show that, you took a reasonable value for something. You can't take retail value for something that you've owned that's used. It's just, the IRS is not going to go for that. So I would start getting my records together and figure out what you're missing and start getting things categorized. If you're a small business owner and you haven't gotten on top of your records for 2016, you really want to start doing it now, because your tax preparer is really going to appreciate it if you have things in order and don't hand them a big mess. You'll probably get a better, perhaps get a better price for your tax return preparation if you don't hand your accountant a big mess of stuff. But this is a time to get going on it. April 15th will be here before we all know it. So here we go, 2017. If you have any particular questions, items you want me to talk about, I would love for you to send me a message and let me know what those are, and I'll try to address those. And if you think the information that you're getting from me is value, I'd appreciate if you would like and share my posts. Thanks so much. I will see you next Tuesday for Tax Tip Tuesday. Have a great day, and I hope 2017 is the best year ever for all of us. And I will see you soon. This is Susan Habel, RVA Fractional Accounting. Goodbye.